So what do you do with a sticky flip? What happens when your property is on the market, it's not selling, you have to look at dropping the price, getting rid of it, or maybe turning it into a rental. Today we're going to go over that because this is something that's happening daily. We get calls from our clients, from other clients. How do we fix this? What do we do? And one of the things we always talk to people about is, do you want to just get rid of it? Do you just want to keep dropping the price till it sells? Or do you want to turn it into a rental? Because if you're going to turn it into a rental, you need to stop dropping the price right now because that's going to affect you on getting a rental loan. If you have the flip, don't keep dropping that price. If you want to move it as a rental, you need to make a decision quickly. Every time you drop that price, when you go to refinance, the appraiser needs to look at the market history. And if they see a price out there that is lower than what they could appraise it for, that's what they have to do. They have to look at what was the last price you had it on the market, and if it did not sell, they can't appraise it for more than you had it listed for. So every time you drop that price, it hurts you on your loan to value on your refinances. Now that you know you're going to rent the property, what are your options? Typically, you're going to go to either a bank or a conforming loan, traditional loan, but if you don't have the time or it's just not in your capabilities right now to get a conventional loan, what are your options? We have three options we always refer people to. Number one, the DSCR loan, because the DSCR loan is probably the easiest, fastest way to get a long-term loan because it's based only on the loan to value, your current credit score. So yes, you have to have a decent credit score. It has to be 640, 680 and above. The higher the score, the better the rate, the better the terms. The last thing is rent. As long as your rent covers your monthly payments on that transaction, you're going to qualify for a DSCR loan. And the good thing is they even have negative products out there. So you could go down to where you're losing up to 25% and they still have a loan for you. Of course, the rates, the terms, everything will go against you on that, but just understand there are options for you. So if you're looking for a rental to put your flip in, look at the DSCR because it is easy. Just make sure you know and understand all DSCR loans have prepayment penalties on there. Typically a 5 or a 3 year prepayment penalty. The longer the prepayment penalty, again, the better the rate. If you guarantee someone that you'll keep that loan for 5 years, you'll get a better rate. Prepayment penalties are kind of like exit fees. If you pay it off early, say you pay it off in year 2, what they're going to do is say you owe us a 3% exit fee. Those prepayment penalties, they are advantageous to you after about a year and a half because after that, compared to what we're going to talk about next, which is a bridge loan, the DSCR loans cost you less even if you sell something after year 2 or 3. Bridge loans is number 2. So if you're looking at getting out of a flip and keeping it even as a short-term rental, maybe a year or 2, you can look at a bridge loan. Bridge loans are just that. They're typically 1 to 2 years right now. They used to go out to 3 years. But during that time, you could keep it on the market if you still want to do that. Or you could rent it. You could do a short-term rental. You could do a traditional rental just to bring in cash flow. Bridge loans are great because they're quick. They're interest only, and there's no prepayment penalties. So if you're looking to get into something just to give your lender their money back because maybe they're raising their costs, maybe they're raising their points, their interest rate, or they're just threatening to foreclose to get you out, a bridge loan is a great exit for you. Bridge loans are usually limited up to 70%, so make sure you understand what works for you just to make sure you're in the right situation. Last, we always talk about it, is real OPM. That's going out and finding the people on the streets, family, friends, neighbors, people in real estate groups that want to put their money to work other than in a bank. Instead of earning 2 or 3%, maybe they could earn 6 or 7%. Win for you, win for them. If you have any questions on real OPM, we'd be glad to help you. We'd be glad to help you on any of these transactions or questions you have. We literally look at hundreds of loans every month, finding out who's still lending, who has the lowest down payments, who has the best rates, the best terms. They're changing all the time. This is all we do, is lend to real estate investors. So reach out to us now because rates aren't going to get any cheaper. Terms aren't going to get any better, at least over the next 12 to 18 months. Do it now, act quick. Even if we can't help you, we know who can. Our email's below. Contact us today, or you can just message us here on YouTube. As we always say, happy investing.